Hey guys, it's Simon with Trade and Perform Coaching, and I'm doing a quick preview. Looking forward to the week in ES trading and kind of getting our bearings on where we are with NQ and ES. Now, interestingly, going into the week, a couple of things. First of all, we are keying off of the swing trade for the week, right? So that really helps in kind of getting definition in our swing trade of where we're going to look to start to execute our trades is based off that indicator. But even without that, we kind of want to get a look and a bearing in the sense of, well, where are we in the bigger picture? And so normally the first thing that I do when I want to find that out is I want to know where's the 50-60 retrace. And this is our high way back at 2026. And if we look at the rotation all the way down, and we are going to have our 50-60 retrace area. And it's very natural when a market has a big roll to the downside that we retest that 50-60 before continuing lower. If you'll notice, what the market's done is it's gotten caught in a very cute area, right? Because then what happens is people start looking to push it higher. So what we've done is we have two key 50-60 areas to kind of key off of, right? So in our notes going into tomorrow, we know that if this market can hold this 1892 to 1911 area on the downside, that can give us an opportunity to come in and push, and I'm going to draw this out, right? If we can hold this area, this could set us up for launches to the upside to retest that 50-60 area. We still have not retested the 62 retrace, and it's very common to get that, okay? But importantly, what this ends up doing is forming a box for us, right? And bigger picture, and of course this box can change, but as of right now, if we can hold the upside of this box, it could give us a push back to the upside. On the other hand, a breakdown, backside test, and it could give us a push to retest areas lower. So that's the first thing that's very obvious on this chart. The next thing that I want to do, let's erase that, is I want to look where are the areas that are poorly auctioned. And if we look, I'm just going to highlight this off, right? If we look right from here down to here, this area is poorly auctioned, and I'm going to just go over here and I'm going to change that color, fill color, TLO. And then if I look above, I can see that this area is poorly auctioned, and if you follow Market Auction Theory, and an excellent book, by the way, if you don't know what I'm talking about, is Mind Over Markets. It's written by Dalton. It's if you're doing volume profile or market profile, doesn't matter. This book is fantastic in explaining the theories and concepts behind auction market theory. I think it's critical for anyone trading ES, NQ, CL, or ZB, ZN. This is a critical book to understanding just the basics. This book will not tell you how to make money, but without it, you'd have a very hard time making money. So that's all I'm going to say. I think it's massively important. I would know it inside and out and be well versed in its content. It's very important to understand how the auction process works up and down. To give a synopsis, the market just, what you need to know from that is that the market tends to like to come back and re-auction areas that are poorly auctioned. This area is poorly auctioned here. And then if we look above, what else is poorly auctioned in areas above? Well, we generally speaking have this area. Let's erase this. And we have this area above. Right down to, I'm going to say right here. And this area is generally poorly auctioned above. And so that kind of gives us a window if we look right up to 2039, right? So the area that's poorly auctioned below is 1875 all the way down to 1832. The market and then the area above is 2039, really starting right, I'm going to say behind here. So from 2002 up to 2039, those are two pretty big target areas. And I would imagine that the market is going to try to make an attempt on one of these two areas, because it simply likes what the market usually likes to do when it re-auctions an area. I'm not going to go through and do a whole webinar on auction market theory, but generally speaking, it'll like to climb up here, re-auction everything, and then continue on its merry way. and vice versa, kind of sneak down here, re-auction all this, and when it's done, come back on its merry way, and then the market will make a larger call. If I were an investor, right, or a trader or a swing trader, right, I generally know that if we look above and to the left, look at all the well-auctioned area we have up here. You know, in order to break out, and since this is the all-time high right here, we've got to get above this point to really have a bull market, right? But even more importantly, in order to break to the upside and even get an attempt on this, you know that you've got to get the market to close back up into the bottom end of this area. And the bottom end of this area right now is sitting at 2039. So as a trader, right, we're kind of stuck in the middle ground on top. We know that there's resistance above 2039, very strong resistance, and that we're poorly auctioned actually right up to that 2039, and that the market likes to re-auction poorly auctioned areas, right? And on the downside, we know that we left some very poorly auctioned areas on the bottom, and my guess is that we're going to spend a lot of time in between here going forward. So I would mark off 2039 to 1832, and I would say that that is the very extended range. Well, the question is, what is the market sitting on? What's in this 1875 to 1832 area, and why is the market found support in that area, and how strong is that support is the next thing that we want to know. So let's go back and look, and if you'll see, lo and behold, prior to making this final assault on this 2026, this area right here, and I'm referring to this area right in here, right, was acting as support for the market rally, right? And how do I know it acted as support? Well, I can look very easily and go, we tested this one. Oh, didn't mean to do that. Here we go. We tested this 1, 2, 3, 4 times. So I'm going to highlight the bottom of this in yellow. The line in yellow, because I know between here and here, if I go back and look over to the left, which I'm going to do right now, take a look at this now, right? If we translate this information, we know that this was prior support and the point of breaking down, right? We can see that we kind of struggled to get above there, and we know, and this is very critical, so see how the market, and I know this is kind of going off a little bit slowly, but think if you can in your head, because what you're trying to do is get an understanding. The entry levels we get in the room, right? Those are very micro entries. We understand that those micro entries, where they can go and where they can't go. But what we want to understand is, well, where are the stretches? Where are the places where the market might run into trouble Tuesday, right? And where are the areas going to open up? Where are the opportunities going to come from? And we know that those opportunities are going to come in stretches. And in order to understand where the stretch might get exhausted, we have to have a concept of the bigger picture. Notice how the market closed and held. When we closed below this 1964. Do you see this bar? And this is exactly where I'm pointing right here. We closed at 1964. We gapped down. Notice on the backside test that we worked very hard to get through 1951 and rejected every time. We finally gap up, drive through 1951, and come down for our backside test and hold, right? So the market's telling you a story. This 1964 to 1951 is a very important location, right? We're already getting that story. Support, resistance, support, gap below. We attempted to get back above that 1964 and closed on this bar right here. We closed back below. Then we finally gapped down, right? And we have been unable to penetrate. So I know additionally that I have an open gap sitting at approximately 1946. Okay, so now my picture, see how I've started on a very wide picture, and now it's starting to come in slowly but surely, right? Now, just a couple of days ago when the volatility was very, very wide, we had about a maximum of 50 points intraday. As we've been progressing through the week, notice that the ranges, you can see this here. I'm going to draw it out for you. If you take a quick look, you'll see in this area that the ranges have gotten much more compact versus this area over here. In this area, we had 50-point ranges. In this area, we've been at 20 to 30-point ranges, with 25 points being the extreme before we've been getting hooked back the other way for major stretches in the case of Friday, it was a 25-point move up, right? So I realize this is a little tedious, guys. Good trading is a little tedious. That's how it goes. The money is found, like in every business, in the very minute, small details. So I'm going to open this up a little bit more. And then I want to know, okay, do I have any open gaps down here? And I know this is bright yellow, so I'm going to move this over here. We know this is a poorly auctioned area. And when I look over here, I can see that there's another open gap, which are very key to the market right down here. Now, normally, without knowing anything else about these open gaps, without knowing anything else about what's going on in the market, my general rule of thumb is when we get to an open gap, the majority of the time, I expect a responsive sellers to step in at open gaps. Sometimes they do it a point before, sometimes they do it 2 or 3 points after. But normally, I'd say somewhere between 65 to 75% of the time, when we get to an open gap and I look anywhere from 2 hours later to 24 hours later, we are a significant distance in the opposite direction of from where we were when we hit that open gap. Meaning that if we get to this open gap, we would reject down and we'd be a pretty good distance away, and vice versa. We got down to this open gap down here, I would expect a rejection back up. So the next question, if you can see what I'm doing here, is I'm building an argument. I'm building an argument for a trading opportunity, okay? And I'm trying to do so in a relatively brief period of time. And so this is what we do in the room. We're going to look in the room during the day to give a very specific pinpoint with a very specific risk reward, right? A very specific exit and entry and stop loss, right? But I couldn't do any of that if I couldn't build the larger argument for what's going on. So, and I have to make certain assumptions in order to make that work. So my assumption right now is that, first of all, anything beyond 25 points at this point, 25 to 30, I'm going to assume that that is going to be my range for tomorrow. Now, how will I know that's wrong? I'll know that's wrong if we have a range in the first hour that's greater than 15 points, I might bump that back towards the 50 again, right? If we have a massive gap up or gap down in the morning, I'm going to adjust that. But if we get the 10 to 15 points we've had every morning in the first hour, I'm going to assume that really anything past 25 points is a golden opportunity for me, and I'm going to look for a counter trade, and I'm going to plug in Friday's trade so that makes sense, okay? It still doesn't mean that I will get the trade, but it means at least I will know where to look and what to expect from that. So if we look from where we closed, the first thing I want to know is this open gap sitting at 1872. Is that reachable? Well, 1872, let's just round the numbers since I'm terribly dyslexic and awful with math. 1870 to 1900, 30 points, 21. This is 51 points away. So that open gap, whether we gap down there, we trade down in the day, I already know as far as Tuesday is concerned, if we get down here, I am dying for a long in this area, and I'm looking for a hook back where probably to 1900 if we get down here as a reversal trade. It's not very likely that we get into this area, but right, what's more likely? Well, let's go and see. If it goes 1821 and I take away 25 points, that puts me at 1900, and 1900 puts me roughly at 1895. For sake of this conversation, we're going to put a white line there, and let's put it dotted. So now see how I'm thinking already? What I'm doing is I'm taking, and if you look, because I always reference it, right? Mark Douglas talks about fear in the market, right? And really the fear isn't what the market's creating, it's what you're creating in your head. He also talks about the unlimited nature of the market. So what am I doing here? I'm building a scaffolding for myself to think through the problem without having an unlimited amount of anxiety or possibilities of what the market can do. I'm putting a reasonable structure based on recent evidence, right? I know what my extreme days look like. I know what my moderate days look like. And now what am I building for? I'm building for a moderate day, understanding what my extreme day might look like. So I know right now my extreme day is down here at this open gap, right? That I expect a responsive buy. I know extreme on the upside, right? That I have this open gap at 1946. That's within reach. If I get an extreme day, that would put me at 50 points. That would put me right here at 1970, right? And if you'll notice that 1970 area right now, That would land me at 1970 right here. That'd be 50 up. Very hard, even in the best of markets, to get 50 up, right? Unlikely, I would even say. What's likelier? 25 up, right? So what I'm going to do is go grab, if I can find it. So we know this is 50 up. So let's go ahead and take off 25 points of that. And that brings me down to 45, right? If I did the math wrong, you correct me. That is about right. 46 is 25 up. And lo and behold, if I look at 46 up, I have that open gap. So now I know instantly. This puts me right in the 50-60 retrace from the swing low to the most recent swing high. This 1895 area gives me a 50-60 retrace, roughly, specifically a 62 retrace. I know that I have good shot at getting responsive buyers down here. This puts me at 25 up for the day. And I know at 1944, so I have now I have a couple of key areas on the upside, right? I have the 25 up and the open gap. I would look for responsive sellers there. I know 1951 to 1964 in this area is the bottom of the old support structure prior to us making a run to the 2026 high, right? These are two excellent areas, and an area where I would get a stretch in here, where I'm going to look for the swing trade to trigger, or on our swing trade, which if you're interested, just email me or come and ask for a trial in the room. But this is aimed towards the guys in the room. Entry number 3 in this area, or entry number 4 in this area, or this area, or this area. These are my key markers for Tuesday, right? I'm really not going to worry much about what's above in this area. I don't have to. It's unlikely that we stretch up there. Now, if we gap up to this area, yeah, I'll come back up and change the trade plan. But now for tomorrow, I know this is my 1964 all the way down to 1944 area. These are my key areas where I want to be prepared to take advantage of the counter rotations back to the downside, the tradable opportunities back to the downside. And I don't want to get bullish up here. If we close up here, fine, so be it, no big deal. But I don't want to get bullish up here, right? I want to look for my short opportunities. Because remember, what we're working off of is that I think the market does this the majority of the time in this environment. Swings from the low, swings from the high, and we have plenty of evidence of that in the last 3 weeks. This is the predominant pattern that we're dealing with. This is what I'm looking to capitalize off of. And so now I have that location, right? Let's clean that up a little bit so everyone can see it clearly. This is now my prime short location. This now becomes my prime long location. And so we'll see how the market deals with that. And you can see this is already the overnight. We've already traded up to 1944 in Globex the last 2 days. Right, we closed at 1921. We're currently trading at 1938. Right, and also keep in mind that even if we gap up into this area, it's highly likely that we'll come in for an attempt at half gap or gap fill right back at this 1921. These are my edges of the envelope for tomorrow, with extreme moves putting me right about into this 1980 area, which is, by the way, again, right back into that 50 retrace. And if we get an extreme move, some kind of news comes out, we know that the 62 retrace is sitting right here between 2000 and 2015, and it definitely would be looking for shorts up here. I don't think we have any chance of getting up here tomorrow. I really think this 1964 to 1944 caps us on the upside and gives us pretty good location for a move back in the middle. I think this 1890 to 1895 most likely gives us a rotation back up, and certainly from this 1875 that I would look for a launch back to the upside. And that basically concludes where I'm looking for the edges going into Tuesday's trade. The other thing that I'd keep an eye on going into next week, right? And this is something that helps me kind of keep gauge of bullishness or bearishness, right? Just simply come in and mark off. Let's see, I got this wrong. Let's say this is Friday, Monday, Tuesday, Wednesday. This is last week's high right here. So those two areas right up there. 1980 area, 1980 to 1985. That's last week's high. This area right here, this 1890, 1895. these areas right here, you can't be bullish if we can't break above the prior week's high, right? Obviously, if you're bullish, you're going new highs week over week. First clue is, before you get all geeked up about is the market breaking to the upside, is can we exceed and close above prior week's high, right? That's going to be quite a difficult challenge considering we closed at 1921 for Tuesday. So I don't have to worry about getting all geeked up about the long side and that we're in some kind of super bull market. Not even close. Now the downside's another question, right? This 1895 area, this swing low area from 1921 is less than 30 points to the downside, right? It is possible that we close below and make a break to the downside. Even tomorrow is possible, right? We could certainly close on the lows tomorrow. That'd be a possibility. While it's unlikely because the market rarely closes on the low, it's a possibility. However, I would look to Wednesday and Thursday, and if we close below in this area, and it's important, close below in this area, right? And specifically, we'd want to get not only close below 1895, which was last week's low, but also if we close below specifically 1872.50. I want to mark that up. 1870, let's call it for sake of conversation. If we close below 1870, that would make me uber bearish if we get below and hold below this 1870. Why is that? Well, look, we had these two closes right in here. This is when it was the ugliest and the meanest, and everyone thought we were going to go to zero, right? So that 1895 and 1872 are kind of like tripwires on the downside. Hey, I'm not going to get overly bearish in terms of my aggression to the short side without getting good trade location. Now, if we close below that 1872, yeah, I might get very aggressive and look for a sweep, a big sweep to the downside. But until then, we're holding. So the last thing I want to know in this big picture is where is the support levels, the old support levels in here. To do that, I'm going to scan off to the left. Right? And again, all I'm building is, I haven't made a single decision as to where I'm going to trade. I don't have to. My structure and my trading rules will give me that on Tuesday. All I'm getting is a picture here in my mind, so I have some relation to where the market's opening, and what I'm doing is keeping my emotion at bay and keeping all my energy structured towards where I'm taking the trade. So when I look and I go, remember this is last year, this area right here. This is where we launched. We made a run from 1790 all the way to the highs, right? Now, this is a long way from where we are, 1921. But we're not bearish in terms of the market structure, right? Grandma, and what I'm talking about is people who own mutual funds, people who invest in stocks long-term. No one is shaking in their boots till we get to 1800 to 1790. I want you to put this so that you know where we're at, right? We're talking about an open gap sitting up here at 1875, right? It's going to take a pretty vicious move to the downside, right? This 1895 is where we're holding. Now, is it possible to get down here? Yeah. We've had some very wide-ranging days. But I know that if I were an investor long-term, I would not be nervous at all unless we close below and hold below this 1800. Additionally, I got to tell you, it wouldn't only be, would I not be nervous, I'd be looking for investment opportunities down here. This would essentially be a significant correction, right? If you look at the number of down days that we tend to have, or what happens after we have down periods, we have a pretty good model for that, right? If we take away everything that we've learned, and again, you can go back and see what the key areas are, we know now that obviously we had strong responsive buyers between 1832 and 1790. So I know all the way through this area, I am looking for, in here, big hooks back up in here. It takes a while without any fundamental news changing, without any bearish economic data to break this down. And generally speaking, I would expect hooks back up from this area, and I will be looking for that all throughout here to the long side. And conversely, on pushes up, I'll be looking for hooks back to the downside on the short side. And why? I'm a day trader, and I make money off of this pattern from here and from here with hooks back up. It does not mean being a day trader that you're overly active. It means that you're pinpointing your entries. Anyways, my name is Simon. I'm with Trade and Perform Coaching. If you'd like a trial into the room for a week, it's not hype. It's just accurate trade location, great risk management, and very focused entries and exits. You're welcome to join. If well, I'm booked on one-to-one coaching, so we won't even discuss that. But there is space in the room right now. So at any rate, I hope everyone's having a wonderful weekend. I'm going home to watch the Ohio State game. I hope everyone has a great night, and we will see everyone tomorrow. We now have a lay of the land. We know what to expect, and I'm really excited about the prospects for the coming week. Talk to you later, guys. Good night.